Hello, and welcome to another issue of Schrand Team Connections. Today we've got the pleasure of talking with Eric Brown. Eric is a CPA serving in the Cincinnati area, and Eric and I have been friends for several years now. Eric and I belong to a business group called TBN, and I've come to appreciate Eric's expertise as a CPA, and one other thing that's important to me is Eric is an active member of the military, and we'll ask him to tell us about that a little bit.
Well, as you mentioned, I am in the military. I originally joined the Army right out of high school in 1998. I served for a little under 6 years in the active duty Army. Left that in 2003, began attending college, ultimately ending up at the University of Cincinnati. Did decide to get back into the military at that point through the National Guard and the Army Reserve Officer Training Corps program there.
Okay, let's talk about the concerns that an investor would have from a tax accounting standpoint, and the things that a CPA can do that would really benefit each investor to take advantage of.
Sure. And when we originally brought this up, it came up in the context of flipping houses. Now, the term flipping house doesn't exist in the tax code. What does exist in the tax code are some definitive principles on what applies to that situation when you're flipping a house and what applies to various other situations. And let's kind of be clear on this. The basic transaction going on here, there's nothing fancy there. You're selling a house. You bought a house for a certain amount, you're selling it for a certain amount, hopefully more than you bought it for, and that difference in price, that is your taxable income on that transaction. There's a few other little, what ifs that go into that as well, but that's the basic line of it. What starts getting a little tricky in that is when you start talking about what was your intent going into that initial transaction. There are several tests that have been laid out here. All of this is covered. There's a court case out there if you're real interested in looking at it, Matthews versus Commissioner, where they have established 8 tests which the court will look at to determine whether or not a transaction is a dealer transaction versus investor transaction. The first one is, what was the purpose for which the property was acquired? Again, talking about, do I intend to immediately resell it, or am I going to hold on to it for a while? What was the purpose for which it was held? It's kind of the same test, but it's, I've gone from what I started as to I'm moving down the line now. Did I change my intention during the course of owning the property? What was the extent of the improvements? Again, when you're in a flipping situation, you're probably going to do a lot of fix-ups really fast versus an investing situation where little bits of stuff over the course of a long period of time. How frequently are you selling other properties? Are you selling a lot of stuff? Selling a lot of stuff, other properties at the same time.
So what's the big picture?
Exactly. Yeah. The nature and substantiality of the transactions, again, kind of goes back to the improvement work you're doing on it. Are you doing a lot of improvements right at one time, or are you spreading them out over a long period of time? Nature and extent of taxpayers' dealings in similar properties. Again, are you selling other properties very frequently? The extent of your advertising and promotion, or if you're doing a lot of promoting and a lot of promoting of selling properties, kind of indicates that you are a dealer and you're selling for, as of course, a business. And then, was it listed for sale through a broker, or are you just trying to sell it on your own?
Eric, thank you so much.
Thank you.
I appreciate the opportunity for you to share with me and with our viewers on some of the intricacies of investing in real estate. There's obviously more that needs to be covered if you're intending to invest in property, and you'll need to get a hold of Eric. And Eric, how can we best reach you?
Best means is email. My business email is ebrown.cpa@gmail.com. Or you could call me. Phone number is area code 513-675-2306.
I would encourage you to do that. One thing that just seems to be very appropriate is it's a whole lot easier to have someone keep you from getting into trouble than to try and get you out of trouble once you're there. So it's good to have that professional advice on the front end. But if you're thinking of investing in real estate, call Eric and then call me.